While retail traders were panic selling on February 5th, institutional investors were quietly scooping up shares at a discount. Welcome back to Smart Stock Sam, and today we're diving into IREN Limited. The company that just posted what looked like a catastrophic earnings report saw its stock crater nearly 12% after hours, yet might be setting up for one of the most explosive comebacks in the AI infrastructure space. Is this stock about to explode after its earnings crash? Or are we staring at a value trap that could drain your portfolio? By the end of this video, you'll know exactly what next week holds for IREN, and whether this represents your chance to get in before the crowd realizes what's happening. Let's get into it. Here's what most investors missed. IREN's earnings looked like a disaster. Massive revenue miss, 9-figure net loss, stock demolished after hours. The financial media went into full panic mode, and retail investors hit the sell button as fast as they could. But while everyone panicked about headlines, something very interesting happened beneath the surface. The smart money wasn't running. They were buying aggressively. Today, we're uncovering why this might be one of the most misunderstood opportunities in the market, and why the next few weeks could define IREN's trajectory for the entire year. Let's talk about the signal through the noise. The second quarter earnings miss sent financial media into a frenzy, with headlines screaming about IREN's problems from every corner. But here's what they're not telling you, and what most analysts completely overlooked. While Bitcoin mining revenue is declining, AI cloud revenue is exploding at triple-digit growth rates. We're talking about 137% quarter-over-quarter growth in their highest margin business segment. And the company is sitting on $2.8 billion in cash. That's billion with a B. This isn't a company scrambling for survival. This is a company with options. While the market obsesses over what IREN was as a Bitcoin miner, institutional investors focus on what they're becoming, an AI infrastructure powerhouse positioned to capture one of the biggest secular trends in technology. Analyst price targets range from $70 to $83 per share, representing massive upside from current levels around $42. But to understand how we get there, we need to see why those headline numbers looked so ugly, and whether that ugliness was actually intentional. The headline friction. IREN reported $184.7 million in revenue, missing estimates by almost 20%. That's a significant miss by any standard. Bitcoin mining revenue dropped 28.2% from the previous quarter, which on the surface looks terrible. If you're a crypto purist watching this, that probably looks like a failing business model that's losing its competitive edge. But here's what the headlines won't tell you. This wasn't an accident or a sign of weakness. This was deliberate strategy. IREN is intentionally pulling power from volatile Bitcoin mining and reallocating it to high-margin AI compute services. They're making a calculated bet that the future is in AI infrastructure, not cryptocurrency mining. The real shocker that had investors hitting the sell button was that $155.4 million net loss, over 5 times worse than what analysts were expecting. That's a scary number that would make any investor nervous, right? But what if I told you that almost none of that loss is actually real money leaving the company? 90% of retail investors get this wrong. That $155 million loss? Almost entirely non-cash accounting adjustments. IREN had $219.4 million in non-cash items, $107 million in unrealized derivative losses, and $111 million in debt conversion expenses. These are accounting entries, not actual cash going out the door. Strip away these paper losses, and you're seeing an operationally healthy company using standard accounting to clean up their balance sheet during transformation. That's a massive difference. Where's the actual growth? This growth velocity should have every tech investor's attention. While Bitcoin mining is being scaled back, AI cloud services revenue surged 137% quarter over quarter to $17 million. Exponential growth in the highest margin segment. IREN is trading a volatile, commodity-based revenue stream for stable, high-demand AI infrastructure with predictable recurring revenue. The market hasn't fully priced this transformation yet. High growth usually means dilution, right? Companies burn through cash, need to raise more money, and existing shareholders get crushed. Not here. IREN built what I call a fortress balance sheet. While small-cap tech companies are desperately raising money at terrible terms, diluting shareholders by 20 or 30% just to stay alive, IREN sits on $2.8 billion in cash as of January 31st. Plus, they secured a $3.6 billion term loan facility at under 6% interest. That's an incredibly favorable rate in today's environment. Do you know what this means? Their entire AI infrastructure build-out is fully funded and completely de-risked. They don't need to go back to the market begging for capital. They don't need to dilute existing shareholders to buy more GPUs or build more data centers. The money's already in the bank, and the terms are locked in. This is a massive competitive advantage that most investors are completely overlooking. They're converting that cash into power, the only currency that matters in data centers. IREN secured 4.5 gigawatts of power capacity, including a new 1.6 gigawatt campus in Oklahoma. Circle this date, April 2026. That's when Sweetwater 1 gets energized. This transforms potential into actual massive-scale revenue generation. With all this infrastructure coming online and that massive cash position, you'd expect the stock to be trading at all-time highs. But February 5th tells a completely different story that reveals the psychology of this market. The stock hit $32.42 in after-hours trading, pure capitulation. Retail investors who bought near the highs were panic selling, stop losses were getting triggered, and it looked like a total collapse was underway. But here's what's fascinating and what separates smart money from retail traders. That dip was met with immediate institutional buying. We saw massive volume come in at those exact lows. Since then, we've seen a steady climb back to the $42 level. This V-shaped recovery pattern tells us something critical about who's in control of this stock now. The weak hands who were trading based on headlines are gone, and smart money has established a firm floor under this stock. They're not scared of the earnings miss. They're excited about what comes next, and they're positioning aggressively for the coming catalysts. That floor creates an exciting technical pattern, a textbook inverted head and shoulders. The head was that $32.40 low, perfectly tapping the 200-day moving average. This is one of the most reliable bullish reversal patterns. If IREN breaks through neckline resistance at $60, the measured move targets previous highs. The setup is there. Before going all in, understand this. IREN has a beta of 4.28. It moves over 4 times as much as the S&P 500. When markets move 1%, IREN could move 4. That sword cuts both ways. 40.9 million shares are held short, 13.5% of the float. Days to cover is low at 1.29, so a massive squeeze isn't the primary thesis. But that short interest provides a nice tailwind with positive catalysts. The options market is picking sides. The February 20th expiration shows a massive put wall at $40 and $45, providing downside support. Call open interest stacks at 42 and 47 strikes. Traders with real money are positioning for breakout, not breakdown. They're betting on upside as we approach month-end, and there's a specific reason why. February 27th, IREN gets added to the MSCI USA Index. This isn't just news, it's a forced buying event. Every index tracking fund following MSCI must buy IREN shares after the close on the 27th. Billions in passive fund assets must own IREN once it enters that index. Automatic, non-discretionary buying pressure. Combine that with Sweetwater energization in April, and you've got a powerful 1-2 catalyst punch. What's this worth? There's a massive disconnect between IREN's $42 price and its potential valuation. The market values IREN like a Bitcoin miner with crypto volatility. But as analysts re-rate this as an AI data center provider, valuation multiples should expand significantly. We're looking at 65% upside to reach the conservative $70 to $83 analyst target range. That's not hoping for miracles. That's simply getting valued like comparable AI infrastructure companies. Before I give you exact trading plan, It is important to remind you, this video is for educational and informational purposes only and should not be considered financial advice. I am not a licensed financial advisor. Always do your own research and consult with a qualified financial professional before making investment decisions. All investments carry risk, including potential loss of principal. Past performance doesn't guarantee future results. The stock market can be volatile, especially with high beta stocks like IREN. Only invest money you can afford to lose and ensure any trading aligns with your personal financial situation and risk tolerance. Trading into this week? Here's the game plan. Entry zone is $42.25 to $42.50. This positions you as price stabilizes above $42 call support. Stop loss strictly at $39, just below recent lows, and the $40 put wall. Primary target is $49. If we break that inverted head and shoulders neckline with conviction, we're looking at $60. The risk-reward heavily favors you with proper management. Final verdict? Buy the transformation, not the headlines. This kitchen sink quarter priced in all the bad news. With $2.8 billion in cash and $3.6 billion in available credit, IREN is no longer just a Bitcoin miner. This is a fully funded AI infrastructure play trading at a significant discount. The MSCI inclusion on February 27th is your spark. Data center energization in April is your fuel. For investors who handle volatility with proper risk management, IREN represents one of the most asymmetric opportunities in AI infrastructure today. The question isn't whether this stock can explode, it's whether you'll be positioned when it does. If you found this analysis valuable, smash that like button, subscribe to Smart Stock Sam for more deep dives, and drop a comment telling me if you're watching IREN this week. See you in the next one.